Hey everybody, and welcome to another video. Dan here today, and what we have going on today is actually a viewer request video. So after one of my last analysis videos, somebody had reached out to me and they said, hey, do you have any videos that goes over your setup and the indicators that you use on your charts? And I realized two things. One, yes, I do in fact have a video that goes over all of those things. But the other thing that I realized is that that video is so old at this point now, it doesn't actually reflect where I'm at anymore in my trader journey and what I really use on my charts now in the day to day. In some respects, they've gotten a lot simpler, and in other respects, they've gotten a little bit more complicated. So today we're going to dive into that, and I'm going to show you guys kind of what my setup is, what I'm going with, what indicators I'm using, and what the settings are for those, and how I use them to help me trade, help me analyze, and kind of just putter my way through the markets every day. So here we go. What you're going to be looking at first here, this is what I call my trader mainframe. So this is the main window. This is what is right directly in front of me. I have a monitor to my left that has another window on it, which is my trader internals. I have a monitor to my right, which has another window, which we call the trader profile. And then I have a monitor right up overhead, in which I have a final window that is called, oh, actually, got rid of it. What is it called? It is called the active scalper. All right. So first, let's start with our mainframe window. What do we got going on here? What do we see, and what are we using this for? So over here on the left, we have a watch list that I will update from time to time, mostly on the weekends for the week ahead. And it's particular tickers and or stocks that I'm watching that maybe might have some setups for some option plays throughout the week, or they're things or companies that I just want to be aware of where the price action is moving to, because it's something that I may be looking at for a long-term investment somewhere down the road, but I want a better price. Underneath that, we've got a scratch pad here where I have the various sectors of the SPY listed out, and what they are, and what weight they carry in the markets. And just below that, we actually have a watch list that is comprised of all of these sectors. And we're just kind of looking to see what the percent change is on the day to day. So one of the things that can help me with is just at a quick glance, I can get an idea of where the particular strength is in the market. So for trading the SPY, let's say we've got our heaviest weighted sectors, the top 4 or 5 here, and they're all heavily green for the day. Well, the good news is that even if the other ones are red, because of the weight that those carry, that can put me in a situation where I'm going to be looking more for long positions in the overall market as opposed to a short position or standing aside because things are kind of choppy. So at a little quick glance, really all that does is it just gives me an idea of what the market's strength is looking like for that day, if it's looking bearish, if it's looking bullish, or if it's just kind of chopping around. On our window screen over here, I tend to keep it in the 1-minute view during the trading day. I'm not using the 1-minute view to necessarily analyze my plays, but I do like to enter an exit on it because it gives me the most precise measurement of where I'm entering and where I'm exiting. I tend to run a drawing set in which I call the SPY levels, and this includes all of my levels for the day, any important relevant VPOCs, where my lower target is, my upper target, our overnight high, overnight low, and pretty much everything that you guys have seen in my other videos on the levels that I use. And also we'll have bigger, broader trend lines, things like that. Just below that, we've got a volume indicator. This is the Welkin volume indicator, I used to use something called the modified volume profile, which I believe was originally designed by Mobius, but I have since moved away from that one and I'm started to use the Welkin volume. There's a couple things about it that I like better than the previous volume indicator I was using. Mostly that I can assign a secondary time frame for this area up here to watch to give me an idea of buy sell pressure. And just below that, we have our Weiss wave indicator. This is a new one that I'm playing around with. I recently started reading up on Wyckoff theory and getting myself much more acquainted with that. And in the process of diving into Wyckoff theory, I've also discovered a gentleman named David Weiss, who was a student of Richard Wyckoff, and he has a volume analysis method in which he uses to trade in the markets. And this is an indicator based off of some of his old school pen and paper technique and style. Realistically, what I'm kind of getting out of this is you can see when there's bull and when there's bear waves being green, bear waves being red, and they're going to coincide a little bit with some of the peaks and the valleys that you're going to see in the day-to-day time frame. But really, what you're trying to gain from it, or what the most important thing you're trying to gain from it, is you're trying to look for changes in tone or changes in character. So for example, as this day was building up, this was Friday of last week, we can see just by kind of looking at the bottom, as the day is going, the bulls really aren't gaining much traction. And we can tell that because all of the bull waves that are forming, they're very much dwarfed in both width and length by the bear waves that we've been seeing kind of form. Then as we get to the middle of the day, you can kind of see there, it really just kind of dies down a little bit. You've still got your bull waves, you've still got your bear waves, but overall, the actual push-pull is kind of low. And that does relate to this very narrow, tight trading range that we kind of got to see. And then towards the end of the day, we can see that as bulls started trying to push it up, we're still getting these big bear wave pushbacks. And finally, there seems to be maybe a little bit of a change of character here, but it becomes kind of short-lived, right? After that, we get one last push up. We've got another bear wave that actually comes in and dwarfs that last one with our final peak. And then as we can see, looking at the chart up above, eventually, boom, we come into this huge bear wave at the end of the day. So things like that can kind of get us primed and ready to recognize when maybe we should be looking to exit a position that we've been holding, or when potentially an entry point that we've been eyeballing may be just around the corner or on the horizon. So looking at this from our studies view, we can see that what we're running on here, very simple, not going too crazy. I've got 3 different VWAP indicators, and there really isn't anything out of the ordinary about them. We've got standard at 1 deviation, 2 deviations, and 3 deviations. So what that's going to do is it's going to give us our solid yellow VWAP line, which is always going to be the same. Doesn't matter if it's 1, 2, or 3 standard deviation, because that one's going to be in the middle. That is our VWAP. Sometimes people will actually turn off the deviation points because they're more interested in just where price is in relation to that median. But I like to keep them on just so I can see when price action has reached any of the standard deviations away from the median line. A lot of times when price action does move up to the second, third tier, either on the bottom or the top, if we don't see a trending day developing, those can be good spots and opportunities for us to fade the movement of the market as it starts trying to come back into balance. So that's one of the reasons why I like to keep on the 3 different standard deviations. And I've got mine color-coded, green for the top, red for the bottom. Besides our VWAP studies, we're going to move this one up just so they're all together, we have an EMA Cloud script, which follows our 13 exponential moving average and our 48 exponential moving average. So that's going to be our fast and our slow. So this script you can see is the cloud that forms between these 2 EMA lines. And when they have, when the 13 crosses below the 48, the cloud turns red. And when the 13 crosses above the 48, the cloud turns this nice light blue color. Why do I use the 13 and the 48? At the end of the day, what your moving averages are for and what they're designed for is you want a fast length that is going to follow price action a little bit more closely, and you want a slow length that's going to lag behind it. This is going to help you determine when potential crossover events are happening or when the tone in the market may be shifting and or changing. There's a lot of strategies out there that are based solely off of moving average crosses. I find that the 13 and the 48 works really well for the SPY, which is pretty much the exclusive thing that I trade in a day trade fashion. And what I'm really using the cloud for is I'm trying to identify areas of weakness in the price action. So, for example, when we opened up here and we could see that initially there was the push-pull between the buyers and the sellers, but buyers could not breach the 48 line. In fact, it actually got tested quite a bit. We couple that on top of the fact that we opened up trading below our VWAP. We had already given up a very important prominent point of control from earlier in the month, and that gave us a good idea that we could probably take a short position somewhere around here because our risk to reward would be anything below the line and anything up to VWAP, because as soon as it crossed over, even breaking through that 48, that would kind of discredit the thesis that we were working with. And sure enough, as price dropped, we could see that it maintained its strength in the drop, and it never really crossed back through the 13 until we entered into some consolidation at the bottom. And we can see that we got a shortening of the thrust on these drops here with this drop, this drop, this drop, and then finally, after a breach through the 13, we got a higher low in this next segment, which was the trumpeting, if you will, for what eventually became a little bit of a crossover event. Now, of course, that's just one part of the equation. Because again, we can look at this in hindsight because all the information is already here. But as we got our crossover event, we could see that the highs were not gaining much traction either. And we actually got another shortening of the thrust between these 3 points here. We're still far away from VWAP. We're trading below our 200 EMA. And we dropped again and just kind of made this really, really gross consolidation in a very tight price channel for most of Friday. That covers our cloud. After our cloud, didn't I just move that up? That was weird. After our cloud, we have our adaptive EMA 200 line. So this one's just going to give us a much broader look at price action and where everything is, if we're trading above the 200, below the 200. And the other important thing to note about moving average lines, the number that you choose is going to represent how many bars of information is being taken into account before that line or that moving average gets drawn. So on our 1 minute chart, that means 13 minutes, 48 minutes, 200 minutes. If we were looking at a daily chart, that would be 13 days, 48 days, 200 days, and so on and so forth. Other than our 200, we also have an indicator over here on the right, which is called our volume profile indicator. So our volume profile indicator is going to give us this cool looking shape over to the right side of our chart. It's going to mark off a high point, which is the value high of the developing volume area, the value low, which is the developing value low for the volume area, and it's going to mark off our point of control, which is going to be the highest volume or where the most agreement of price took place throughout the day. So for Friday's profile, we can see that everything kind of dropped off the open, and then we get this nice little B shape here. Highs, lows, point of control. So what would we use our volume profile for? Well, we can use the volume profile to help us identify where good opportunities may lie in trying to trade a balance area. So if we had a very traditional bell-shaped volume curve, one of the things that we could be looking through for throughout the day is as price is approaching this value high or where the profile starts to get thinner, those are the points at which the price is more likely to turn around if it doesn't continue to get follow through and end up pushing through and distributing itself into a new value zone. So we can trade from the extremes back towards the point of control, because the market will tend to rotate across that point or to that point as it's developing and as price action is kind of slogging itself out for the day. Now, we can also use it to help us determine when the market may be trending, or when we may be getting to a point where there's some weakness or some structure that may not look necessarily right. So with this B-shaped profile here, there really wasn't anything to play off of it per se, but we can see that we're making this really flat, very, very voluminous area here at the bottom. And one of the things that we could have determined is right around here, the fact that this low is even just a little bit higher than this low back here, there may be an opportunity for us to actually take a long position that has a very decent risk to reward. Our risk would be a low, even lower than that point, but our reward would potentially be all the way back up to this value high area where we would expect to see price turn around again as it had previously throughout the day. We know that the shorts are not able to push this lower, and we aren't having any liquidation breaks below this point, which is why we're getting that B-shaped profile. So something like that just kind of gives us a little bit more of an edge to identify where a good potential location for trading may be. What else do we got going on here? We have our SVE pivots script. Now, this is a new one that I just recently started playing with. If you've seen my levels videos before, what the SVE pivots script does is it actually replaces some of the lines that I used to manually draw in. So for example, our R3, R2, R1, our previous day high, our previous day low, the pivot point, the S1, the S2, and the S3, I am now using this script on the day period aggregation to automatically generate those lines for me. Saves me a little bit of time in the morning before I get everything ready. The only thing that I don't like about the script, and I'll kind of point this out on the chart right now. So this right here, this is our, actually I couldn't even tell you which line this one. This is one of our S lines or one of our R lines, as is this gray line right here. And I can't tell you which one it is, whether it's an S or an R, because I don't have any relative points to really look at to gauge that, nor do I have labels on them like I do for my overnight low, or upper target line, things like that. Now I could kind of mess around with this a little bit to see if any of the other lines pop up prominently, and that might help me gauge it. So I could, yeah. So I mean, it's not going to be as, what's the word I'm looking for here? It's not going to give us as much as if we wrote it all out ourselves, which, for better or for worse, but it is still going to be there. So if we know that we're potentially looking for pivot points at the S and the R lines, well, when we see price action move towards one of these gray lines, we don't necessarily need to know whether it's an S or an R or if it's the 1, 2, or 3. We just need to know that that's a spot where we could potentially see pivoting action. And, same kind of goes for the high and the low. If we have those set up as different colors, we're still going to be able to know and recognize where the low of our previous day was, where the high of our previous day was. And of course, they're going to be in relation to our value zones, right? So if I'm still marking out the previous day value low, that means our actual low is going to be somewhere below that. And the same thing is going to run for our previous day value high. Our high is going to be somewhere above that. And I think that just about covers all the indicators we're using on our mainframe. As far as settings go, Vwap, standard. The only thing that I changed in Vwap was their opacity and the colorations. EMA Cloud, that one also pretty self-explanatory. I make sure that I'm set to close. I use exponential, and I have my fast to 13 and my slow to 48. Other than that, you can kind of play around with the different variables on it, see if there's something that you like potentially better or worse. And you can also pick the colors that represent your fast and your slow average. And you can also change the colors of any signals if you want it to actually give you signals when there are crossover events. Adaptive EMA, again, that's pretty standard. You're just going to put in the length that you're going to be using. SVE pivot script, I did have to mess around with this one a little bit. I changed the opacity again in each of them. And I have it set so that the R's show. I don't have the RMs showing. These are like a mean resistance level or a support level if it's in the S. And it's just kind of extra lines on the chart that aren't important to me. I don't need them. So all of my R levels are gray. All of my S levels are gray. My high on the day is a nice see-through green. My pivot point also gray. And my low on the day is going to be a nice see-through red. Our volume profile, a lot of this is fairly standard setup. I don't mess around with it too much. I do have it set to automatic. Time per profile is set to chart. That's how we make sure that it pops over to the right, and it's not going to be trying to take individual profiles of each day. And I'll show you what I mean by that in one of my other charts in which I have a slightly different volume profile set up for that. On expansion, yes, 1,000 profiles. I do want it to show the point of control. I do want it to show the value area. Standard value area, 70%. You can mess around with the opacity as well, whether you want it to be higher or lower. That's up to you. And you can change all your colorations too. Weiss waves, pretty standard. I use the 5 length for detection of change. And our Welkin volume, this one's got a ton of settings in it. So what I would recommend if you decide you want to use Welkin, you're going to have to play around with these quite a bit to see what you like to be represented, because I promise you it would take me far too much time to actually go through what each of these individual things do and whether they're going to be useful to you or not. And quite honestly, some of these things I don't even know what they do. But I do have mine set up to show me the standard push-pull between buyers and sellers. So the volume bars are going to end up showing as green and red. You can signify what the average day's volume length is going to be, and what the average volume length is going to be. That's going to be your indicator over to the left side of it, keeping track of the averages. This is really the cool part here. This is what I really enjoy about this indicator, is that you can set a second time frame. So for example, I'm in the 1 minute on this chart, which means I'm going to get 1 minute information. But for the second aggregation, I have it set to the 5 minute, which means where our buy-sell strength appears, I'll be able to see the 1 minute for the first aggregation. And then in the second aggregation of that information, it's going to give me the same buy-sell strength, but it's going to give it to me on the 5 minute chart without actually having to be on a 5 minute chart. So that's really cool. I do enjoy that. Yeah. All right, so that's going to cover our main frame. And one of the things I'm also going to do, I'm going to put up some links at the bottom of this video in which you can just do a copy paste for the setups that I have, and you can kind of play around with them, mess around with them. There is one that I won't be able to give you though, because I do have a paid script inside of it. So that's one you'll have to set up on your own. And we're actually going to get to that one next. So we're going to move over to my window on the left. Now I actually have this on a horizontal monitor, so it looks a little bit differently than watching this on a vertical monitor, not a horizontal monitor. So it's like a piece of paper upright. And one of the things that we're going to do, so first I'm just going to point out what is in each of these blocks. Then we're going to go to a look where we're just going to look at each individual screen, because that'll give us a little bit of a better idea of what's going on there. So first and foremost, our top left, we have an ES chart set to the 15 minutes. So this is the ES futures. We have the NQ futures over here on the right. again, set to our 15-minute time frame. We have a breadth chart, an indicator here. That is our $vold. And this is the advance decline, but this is also with weight. So this is the paid script that I was talking about. Unfortunately, because I do have it, I can't share this with you guys. But what I want to point out about this script, what it is it's just a visual representation of that list that I showed you on the left side of my mainframe screen. Here, I'll pop this over, just this list right here. This is a visual representation of this, and it takes into consideration the weights. So the histogram portion is what gives us, it shows us what the advanced decline looks like with weight considered, and then the line is just what the advanced decline looks like in general. And you can actually just put an advanced decline script up yourself. There's one baked right into the Thinkorswim platform. It just looks a lot different than this particular indicator. It's actually going to look a little bit more like our tick indicator, which that brings us to our next thing. So our bottom left here, we have our ticks. And over here on the right, we have level 2 data for the SPY. So we can kind of look at the books as they're coming in. So let's take a more in-depth view at what's going on in each of these, and I'll give you a little bit of an explanation of how I'm using them on a day-to-day basis. So with our top 2 screens, we've got our ES futures and our NQ futures. Very simply, I monitor a fast and a slow exponential moving average. I use the 13 and the 48, just like on my regular chart. I use a longer average, the 200. And I also use an anchored VWAP for this particular script rather than the regular script, the regular VWAP script. So the reason that I do that is so that I can pick the exact point at which to anchor the VWAP to, and I choose midnight. So I actually anchor that right to when the futures change over to a new trading day. I think with the regular VWAP script, it's scripted to open up when markets open. So with the futures, that can actually throw the data off a little bit. So that's why I prefer the anchored VWAP for this. So I can just change it and I can anchor it to midnight of the current trading day. And it allows me to see that. This one's a little bit complicated to set up. So for this particular script, when you're anchoring it, the most important thing is to make sure that you pick a time in 24-hour time. So 0 is going to be our midnight. And when we're anchoring it to a date, it's going to be year first, so 2022, followed by month. We're in June, so that's 06, followed by the trading date. And this is currently anchored to the 10th. All right. If you don't put it in like that, the script is not going to work. Other than that, we have another very standard volume profile set up next to our chart as well, so we can get an idea of where a lot of the action has been happening, where the value high is, where the value low is. And what we're using this for is similar to the way we would look at any other chart. We're just kind of trying to gauge the strength in the price action and whether it seems to be moving down or up. We're using the volume profile to help us identify where the ends of auctions may be at, where the strength of an auction may be at, or if there's a change in the tone, if we cross over that anchored VWAP to the upside or the downside, if we get a crossover event in our moving averages or through our 200. These are things that will give us an idea of what the broader market is doing. So if you're trading securities that are within those broader markets, that can help you identify just overall general strength. For trading the SPY, the SPY is a derivative of the ES. So knowing what the ES is doing can be beneficial to that. And then, of course, if you're trading the Qs or any of the big tech stocks, you're probably going to want to know what the NQs are doing as well. And this is set up exactly the same as my ES chart. We've got our moving averages. We've got that anchored VWAP anchored to the same day. And we have our very standard volume profile, again, just so we can see highs, lows, points of control, things like that. And then we have our breadth chart. And our breadth chart specifically is using the breadth bubbles script, which is a free script from shadowtrader.net. And we've got the ratio histogram right there on the bottom. So to get the breadth, what we do is we make sure that we are on the $VOLD, which is going to follow the New York Stock Exchange, the NASDAQ. And by putting those other two scripts on, we're going to get the bubbles, which is going to give us an idea of what the breadth is looking like in the market. So what is breadth? That is the ratio of stocks within the market that are advancing versus declining. So when we have a negative breadth, that generally gives us a sense that bears have more control in the market than bulls. And vice versa, if we have a positive breadth, that gives us a sense that bulls are in a little bit more control of market and direction than bears are. This isn't always going to be a perfect or an exact or an easy indicator to use. You're not necessarily going to be looking at this to determine when and where to trade. But if you notice that the breadth is very close to a zero ratio, or if it's moving back and forth across its zero line, that's going to tell you that the market action is pretty choppy, and it might actually be in your best interest to stand aside. Or if you're having trouble trying to determine whether or not we are in an actual trend, you can use breadth to kind of help you build some confidence in that. Or at the very least, if we've got a very negative breadth, that can help you start looking for peaks to short and just kind of generally staying away from taking long positions unless something within that changes. Like if we start making some significant higher in the breadth ratio. Following that, we have our weighted advanced decline. We already kind of talked about that a little bit. The histogram represents the weighted sectors. So it represents the market's advanced decline, how many stocks are advancing, how many stocks are declining. And the histogram portion of it visually represents that based off of the sector's weight. So it takes that into consideration. So I can kind of give you a little bit of an idea by looking at this. Wait, is that it? Oh, no, this is it. So for our price study, we actually put in an advanced decline ratio. You can get this study right off of Thinkorswim, and it will give you something that is going to look a little bit more like a tick chart with lines on it. But this is the script you won't be able to get here, the actual weighted AD line. So as you can see, we put in the weight of the sector, and that's how it knows within its formula to take those into consideration when it's building out our histogram. So then the line portion is just going to be the advanced decline of the market. So basically with the regular advanced decline script, you're going to get something that looks more like our white line here, which can be pretty helpful. It absolutely can be. It can give you an idea of whether or not more stocks are advancing or declining at any given moment. But what the weighted does for us is it can help us avoid moments like this where we see that we're getting what appears to be quite a bit of positive advance, but what we can see looking at our weighted is that while there's a positive advance, we're still actually getting quite a bit of pushback on the sectors that have more weight to them, and they never actually end up crossing over our zero line. And as we can see, kind of looking where these match up, this is where it looked like, we're starting to build that rally, right? Like here's the peak on the 1 minute chart that coincides with the peak there. Oh, here's that next peak on the 1 minute chart. But what's this? We see this and we can still see that it's not making that push above. The sectors with the heaviest weight are not gaining traction. And look at that. End of the day, we end up seeing a sell-off in which the non-weighted or the decline then catches up with what's going on under the surface, if you will. Again, not an indicator that's going to give you trades. It's more something that's just going to help you feel more confident in the direction of the market and where the best opportunities are going to lie. I can't stress that enough. Our internals watch list, our indicators on the internals side, all that does is it helps me determine if I'm looking for a short or if I'm looking for a long inside the price action that I'm trading. It's not going to tell me that I'm right or wrong. It's just going to help me tip the odds a little bit more towards the favor of the trade that I'm taking, meaning I potentially have a little bit more leeway to be wrong. Price action, isn't going to be strong enough in the direction against me necessarily to really push me or bully me out of my position. Again, the market's going to do anything that it wants, so these are not indicators that we make trades off of. They just help us to determine what side we want to be on. And then, of course, we have our tick chart. So this is going to be keeping track of how many ticks up and how many ticks down within a 5-minute period the New York Stock Exchange is actually taking or having. So this can give us an idea of where things are moving in relation to each other. And our cumulative tick script, what this is going to do is this is going to help keep like a running tally. And one of the things that we can see by it is that this is going to really help us identify if a day is trending or if a day is range bound or if it has the potential to break out of that range into something new. So given what we've kind of got here on our tick chart and the activity or the action that we knew we had going on from Friday, there really wasn't anything in our cumulative tick that was telling us that we were going to get a break to the upside. We're gonna really start pushing and testing some of those upper levels, because while we were still getting positive ticks on the day, from a cumulative standpoint, we were still pushed well below the zero line. And buyers were just not in control of the market. So even when we did get our peaks, by looking at our cumulative tick, that would help us feel more confident about looking for shorts at those peaks, as opposed to trying to look for longs at the bottoms. That isn't to say that we can't make money playing long from the bottom. You absolutely see from the chart, there's plenty of opportunity to make money on the longs from the bottom. But if we're trying to tip odds in our favor, and if we're trying to go with where there's less chance for error, so to speak, if we're shorting these peaks, we've got more of a tested direction to play to. And unless there's some kind of change in the tone, we don't necessarily have to worry about the position moving against us too quickly. Of course, it always can. So please, if you're trading, make sure you're practicing good risk management, because that, above all else, is what is most important. And then, of course, last but most certainly not least, we've got level 2 data. So this is telling us the bids and the asks coming in and what exchanges they're playing on. This isn't arguably, I'd say, something that's super relevant. I had an extra window and I couldn't decide what to put in it, what kind of information might be potentially helpful to me. So I decided level 2 data. Why not? And that's how we got level 2 data. And that about does it for our leftmost monitor. One of the other things, actually, I should probably show you that here. Sometimes I'll flip up on my left monitor if I'm not feeling like I want to watch the trader internals. This is a good one to have too that I like. Where is it? Sectors. So I actually have very simple 5-minute charts of all of the SPY sectors, and I actually have them listed out in order of weight too. So you've got your heaviest at the top, finally tapering out to the weakest ones towards the bottom. And there's nothing crazy on here for indicators. EMA Cloud 13448 and the 200 simple moving average. But yeah, so this, similar to if we've got our histogram up, or if we're just looking at what the sectors are doing on our mainframe, we can look at this at a glance and we can see if the markets are, well, red or green. And we can see where there's potential crossover events within the day and where there may be some strength and or some weakness. So again, not like this is going to give you, easy trades to play off of, but it is going to give you another glimpse or another lens into what's going on inside the market. Then we have our rightmost trading screen. This one, I would argue, is the one that's probably gotten the most complicated, just because there are quite a few things going on here. And I could probably do an entire video on these and what exactly I'm using them all for just by itself. But for the sake of this video, time and brevity, we are going to kind of keep this one a little bit short. So up here in the top left, what we're looking at is we're looking at a bar chart. So this is a different style of charting, if you've never seen it. And it actually shows candlesticks as just lines with open on the left and close on the right. If the close is above the open, it's a white bar. If the close is below the open, it's a gray bar. And on top of that, or actually before I get there, if you wanted to set that up, it's, you're going to find that in appearance, right? Where you've got all your other different types of charts. This is bar chart. And then I actually set my upticks and my downticks to these neutral grayish whitish colors because they normally show up as green and red. And I found that that was distracting to my eyes when I was trying to measure, or when I was trying to analyze the bar chart versus the other Weiss wave indicator that I have running over it. So this, similar to this, is going to be showing us where the bull waves and where the bear waves are appearing, but this one is going to give us a slightly different look at that. And on top of that slightly different look, it's also going to tell us how much volume played a part from the start of the wave to where it's calculated the finish of the wave. So one of the things that we're looking for when we're identifying the strength of waves is, again, it's this change of character, this change of tone that we're looking for. So we've got an 11, we've got a 20, we've got a 29, and we can see 1, 2, 3, 4, 5, 6. We've got a 5. We've got a 1, 2, 3, 4, 5, 6, and we've got a 1 here. So these bull waves, there isn't a lot of volume in them, and they aren't really matching the bear waves too much. But the other thing that we can see is that the amount of bearish effort being put in, while it's almost double what we're seeing for our bullish effort, we can also note that we aren't making significantly lower lows. So that right there, these 3 bear waves, they tell us that while the bears are ultimately in control because they're keeping the buyers from taking over, they aren't able to generate that downward force. So something like this would tell us that we probably could actually look for a scalpable long position after we see this thrust shortening. And then vice versa, we can see that when we start coming up at the end of the day with the bigger bull waves, but we can see that the bear waves still haven't really lost any of their luster. They're still quite voluminous. So that tells us that this bull wave isn't going to continue on forever. In fact, if we look at these peaks, we can see that they're really not generating much more space above. A little bit more, mind you, though, than our bear waves were. So this is going to be some good information to take into next week's trading session, especially if we end up opening somewhere near one of these tested support areas, or if we end up opening below one of our low support areas of the day, and then kind of seeing where the first couple waves take us in relation to the previous one. I also have a Welkin volume indicator running on this chart. I believe this one is set to the 15 minutes, though. We're going to take a peek at that real quick. Yeah, so I have this one set to show me the second aggregation period as the 15 minutes. And then our Weiss wave indicator we're using, this is called the Weiss wave Z, and Z for the zigzags. And there's really no crazy changes to this. Actually, I think this is pretty much the standard with how it comes. I did change my display mode to volume, and I think I did make sure that it was attached to the closing price, because there's a couple different settings you can use in here, and you can mess around with it, see what you like, see what makes waves that are easier for you to read and recognize. Actually, I think this one might be the standard, and just to kind of show you, see that changes what some of our waves were showing. Now we're getting quite a few less in the day. But yeah, you can mess around with all that stuff. To our right, we have our expanded monkey bar chart. So this is the Thinkorswim version of Market Profile. I tend to run my levels drawing set over it, so it's the same one that I'm looking at on my 1-minute chart. But with the extended monkey bars, I can see where the trading periods are creating weakness or strength in relation to my levels, and it's just kind of at a quick glance. That could be pretty beneficial and helpful to me. For example, when we saw that we were building up a poor low here, I had been riding a short position on this day. I entered after we broke through our trend line, and I rode this short position all the way down to here. It was worth quite a bit at the bottom of our B period and our C period. But by the time I ended up selling it in E period, it had lost quite a bit of value, even though it ended up going lower, because you can see that it just kind of chopped sideways for a bit. It lost implied volatility value, and it ended up losing theta value just over time. But one of the things I was looking for, and one of the reasons I didn't sell it immediately, was because we did create that poor low, and I was watching as we were making descending highs. So my thesis was, or what I was playing to, is I was looking for the break of that poor low, that fixing of the structure. And then sure enough, we did end up getting that fix. We broke through. I ended up setting a protective stop, so if price action came back up to this point, it would execute out. It did, because it corrected and did not continue. There wasn't follow through. There wasn't momentum. If there was, I could have ended up riding that to another level, but there wasn't. So instead, I took the profit on my short position, and sure enough, it's a good thing that I did, because as you can see, we didn't make a lower low on the day. We did make another poor low, but at that point, that's another 1, 2, 3 more periods to the side with more sideways action, which means I would have lost more implied volatility value, and I would have lost more theta value by the time I ended up selling it. And then, of course, I also would have had to end up holding it through this volatile point where it broke back through our trend line. And quite frankly, if it had done that and I hadn't sold the position already, that would have been my, get out of Dodge point, because this almost looks like the market is trying to do something different. We've had all these lows all day that just couldn't push lower, so now we're rotating up away from it. We're making higher lows, we're making higher highs. Chance for this thing to run into close and maybe test some of these stop points from the morning session. But of course it didn't, but we have no way of knowing that, right? We can only trade based on the information we see to the left. Bottom left corner, we come to a relatively untouched chart. This is a 15-minute candlestick chart, and the only studies that we're running on it are our standard volume profile, and we also have a daily EMA script that our very own Papa George wrote for us, that we run on the chart just to see if we're trading above or below where the daily moving average would be on a 15-minute chart. Because this is scripted to the day, it actually doesn't matter what time frame I look at this chart in. This line is pretty much always going to be in the exact same place. And then, of course, we have our Welkin indicator set up, and this one's going to run off of the 15-minute, but it's also going to give us, I think I have it set to 30-minute. Nope, I have this one set to the hour. So I can also see what the buy-sell strength is looking like on the hour time frame. So the other thing that I use this chart for intraday is, in Welkin theory, I'm also looking to identify where price channels are forming and where potential breakout points can be from those price channels. So I actually draw those on this chart, and I'll use something like my Wyckoff drawing set. So then when I see things on the broader chart break through, like for example, when we ended up opening way below on this gap Friday, or well, actually, why don't we talk about Thursday? So one of the things that I had been looking at on Thursday before this big drop, you can kind of see where this trend line is. I'd actually said to everybody, and I since deleted the other trend line. But as we were coming into Friday, we were starting to form a price action apex in what had already been quite a long consolidation point for a channel. So I had said, hey guys, when you see this break out of this apex, like get ready. It's either going to be testing for an event to move through the other side, or it's going to break hard. And sure enough, we had a first test of it right here. You can kind of see that wick breaking through, which ordinarily would be a spring event, but the momentum could not be generated upward. There was no interest in buying. So then that spring event ended up being the precursor to a breakdown. And sure enough, once we broke through it, tested that same apex line that we had drawn, it just dropped like a rock the rest of the day. And that's something that if you actually go back and draw these things on charts, you are going to see this pop up quite frequently when you do get consolidation points. The longer the price action consolidates for, the more violent the end reaction tends to be. And this is one of the reasons why I've been really digging Wyckoff theory and really getting into it, because I was already trading off of identifying the areas of consolidation and trying to take shorts at the highs and longs at the lows. But now there's an extra element to it where I have a little bit more context to specific events that I can be looking for that may help me identify when a real break or a false break is happening, or just giving me really good locations for risk to reward. So if you've never heard of Wyckoff theory, or if you were somebody who was already trading off of consolidation zones, highly recommend look it up, start diving into it. It may be that missing puzzle piece that you just didn't realize you were missing quite yet. But yeah, well, that was somewhat English. We'll go with it. And then over here, we have a nice, simple 5-day extended monkey bar chart in which we have our double volume profile. So this one's pretty cool, and I'll show you guys how I set this one up in a moment. But basically what this does is it gives us an extended monkey bar profile for each trading day, and it gives us a volume profile for each of those trading days as well, showing us where the value high, value low, point of control was. We can also see how much volume was occurring based on our little volume bars. But we also have a volume profile that takes all of these days into consideration and builds that out as well with a volume low, volume high, and a point of control. So the way we do that is we just set up two separate volume profiles. Now, the standard one that we normally use is this one, right? Just set to chart. But if we add another one in, and instead of chart, we change it to day, that means it's going to build a volume profile chart for each specific day inside of the chart, as opposed to just taking all of the information on the chart to give us a volume profile. And that's how you do too, plain and simple. You can play around with that. There's nothing fancy to it, and you don't have to use it in extended monkey bars. You can use it in just regular candlestick charts. It works best on charts that span multiple days. I wouldn't recommend doing this kind of a volume profile split on something that's just a single day look. It probably wouldn't come out quite right. But, something you can play around with, because you can also, as opposed to the day, you can do this for weeks, months, hours, minutes. So you really can have a volume profile built out for even, like, if I wanted to, in theory, I could build out a volume profile for each of these 30-minute blocks, and I could see where the the value high, value low, and point of control is for each individual block. That would probably be a little bit overkill, but you can do it. You can. Lots of really fun, cool tools. So yeah, guys, that is pretty much my trading setup and the indicators that I use. So like I said, it has simplified itself quite a bit from things that I used to do, but it also has gotten a little bit more complicated in some respects as well. The only other window that you'd be looking at would be my top one, which is my active scalper. And if you want to check that out, that one hasn't changed at all. That's still the same from the setting up the active trader video. So please feel free to check that one out if you're curious about the active trader. Like I said, I will put these the save states for the screens that I use for my right side and my main chart. I can't give you guys my left one just because it does include that added in paid for script. But if you are curious about any of that and you want to set it up yourself, you absolutely can. You can use just the regular advanced decline. There's definitely some videos out there on setting those things up individually. And maybe that's something I'll do in the future. I'll make a new video and we'll simplify the actual setup and building out of the internals chart. Because like I said, today was just a general broad overview of my specific setups and what I do. If you guys want, please feel free to leave some comments on these videos. And in the future, if you're interested, I will actually go through and set up and build out these particular chart windows. So that way you can, kind of get an idea of how to do it yourself. Obviously, you also can just copy the links that I'll be providing and you can edit them from there at your own leisure. As always, guys, if you enjoyed this video, please like, subscribe. Every single one helps us get more views. I love doing this. This is why I keep doing it. And please feel free to join our Discord, trade live with us every day, chit chat, hang out, ask me questions, make fun of me. It's all good. But no, seriously, thanks for watching, guys, and we will catch you next time.